Well, I had mentioned yesterday that 431.8 is what I had. We hit 431.73 was a key level to watch. That if we were to reject it hard, which the double top is about as hard as you can reject it, that we were going to see a pretty massive dump, and that was going to be pretty much a free money puts. Unfortunately, I was busy getting the kids from school when it did it, but I mean, we had quite the sell-off for about an hour there. So that was quite the rejection. So where does that leave us right now? Well, you can see here, I did adjust this tan level just slightly. It was at 429.4. I did move it up to 429.7. I kind of just looked at my candles back here, and I was basing it more off this candle right here, but I decided to go up to this top and these two peaks right here just based off today's price action, just so you guys are aware. But you can see we're still sitting right here. We closed under at that channel, so 429.7. We rejected the red rising wedge resistance line, and we also rejected, I mean, smacked it right on the face, the bear market green resistance line. That's a pretty massive rejection. So the one interesting thing to look at, and this will be more interesting on futures when I get to that, is you see here we actually lost this black dotted support line, and we finished through, but we did push through that this morning. So we're going to go ahead and get rid of that. And this kind of really cleans up our chart here. It makes it look real nice and clean, which I love a good clean chart. It's very simple now. So now it's pretty simple. What we're looking for is 429.7. It's going to be key resistance tomorrow. If we open there or below it and we just drill from there, we could be putting in a temporary top and we could see a more meaningful retracement before we try to push through this. There is another chance that we could test the bear market resistance tomorrow at 431. It's really about 431.5. Those are the most important resistance. If we get through this, honestly, nothing else really matters. I'm going to be looking for about the 458 by September 9th is the trajectory that we're currently on. But my suspicion tomorrow, this isn't really quite a gravestone doji. The candle body is just a little too big for it. But with this longer wick up top versus down low, it is almost like one, kind of like we saw right here, honestly, on August 8th. And then we saw a pretty big retracement. We could be seeing a similar setup to this right here. So I'm going to be looking mostly to see a rejection in the morning. And that'll be a good put opportunity if we don't open big red at 429.8, and I'm going to be looking for support down here at 427.2. So tomorrow is FOMC minutes, though. It doesn't mean the day has to be green because there has been red FOMC days or FOMC minute days, but we should see pretty much a sideways tight range about 0.3 to 0.5% all day long until 2 p.m. 2 p.m. to 3 p.m. we should see a pretty big movement up. And then after 3 o'clock, it kind of varies. Sometimes we run from 3 to 4, it's still green. Other times from 3 to 4, we dump really hard. So it'll be interesting to see what that brings tomorrow. But that is something to keep in mind with these levels, that there will be that volatility from the FOMC minutes released at 2 o'clock. I did release in the Discord a whole breakdown about how I'm trading that tomorrow if you're interested. But those are my main levels I'm watching. Futures, so this is where it's interesting. So you see we have this blue rising wedge here. We actually broke through support, so let's get rid of that. But we also broke through resistance, so that's kind of interesting. So now we are kind of in a weird limbo here. So what I'm going to do is I'm going to adjust that to our new resistance. I'm going to change this to red just to match. So this kind of matches the SPY chart now. So we're just kind of in this big, huge rising wedge. You can see the new candles open for futures, and it is currently double topping where we're at. So that's something I'm going to keep a big eye on. So one of the main things about futures, though, is it did not test the bear market at 43.35. So tomorrow, 43.32 is where that one is going to be at. So that's something to keep an eye on. The fact that futures didn't touch it is kind of a big deal, but the SPY did touch it. So The futures daily candle is more of a doji too, with that smaller candle body and longer wicks on both sides. So I do suspect that we're going to see further support tested down here. So I'll be looking at 4,300 as a big support, and then from there looking closer to 42.78 for supports. On the SPY weekly, about the same thing last night, or today I mean. We did reject this 432 weekly resistance line. We did not make it to the bear market weekly resistance, which is about 432.8, and also this rising wedge resistance right here. So that's something to keep an eye on as we go forward. We are setting up with a hammer candle right here, though, which could be putting in a reversal, much like we see right here, actually. You see we got this big green candle, then a hammer, and the next week dump. So this is weekly candle finish is going to be interesting, especially after this 9 weeks of upward momentum we've had. So I'm keeping a close eye on this as this week finishes out, especially with monthly options expiration on Friday. Futures, same thing. This weekly resistance is a little higher just because of the way futures trades, but we didn't really make it there. 43.40 is what I'm calling it. We didn't quite make it there. We got close though, but we just didn't make it. So futures right now is actually setting up as a doji, which is also going to be a good resistance. So you see the effect of a doji right here, right here. Just something to keep an eye on, especially if we do see a bigger retracement. We're going to be really seeing almost like a gravestone doji, which is just like here, which is kind of interesting because this was the March top. Was this week right here, obviously. So if we see a similar setup off of the resistance line, I mean, it'd be pretty close to the top if you're trying to guess for the top. That'd be a pretty good guess. So Apple, same thing. We see this black, pretty long, or 7-day long, 6-day long resistance line was broken today. So we can go ahead and get, oops, wrong one. Go ahead and get rid of that. So now we're just kind of left in these two. This is a rising wedge now, so we can make this our black rising wedge now. And then we have the red support line from the 9-week long bear channel. So Apple looks like it's kind of dying out. We're kind of seeing a similar movement right here back to August 4th, where we have a pretty green run up and then a doji. So that's what we set up today. It is a red doji, or technically a red day, even though it finished out as a green doji just by the way the candles are calculated. So we did not test this bear market resistance either, which is interesting because I really suspected Apple to do it first. I didn't think SPY would touch it first. But we saw a lot of weakness from tech today in general. So that's going to be something interesting, that tech is losing its steam. And today, SPY was driven by like the NYSE, like the regular exchanges. So something to keep an eye on today. Key resistance is going to be right here, 173.3, and if we can do it, 174.5 is the bear market resistance. But I kind of suspect that we're going to test support down here at 172, maybe even down at 171 if we have a pretty red day. Same thing with Apple. We're kind of setting up on this hammer candle, which you can see right here. We have one right here and one right here, and what they did. So that's going to be something interesting to keep an eye on as the week goes forward. Overall with the VIX, same thing. We're still in this huge falling wedge. This 19.7 level is becoming a magnet though. And if you look back to April, we're kind of seeing a similar sideways momentum here, or sorry, March, sideways momentum. And that's when we saw the top put in for the March rally. So we're getting close, I think. I'm not quite ready to go long yet. I'm going to give it a couple more days here till Friday, and I'm going to consider if I want to start going long in this market or not. All right, you guys have a good night. We'll see you guys tomorrow for FOMC Minutes. Thank you for tuning into this video. If you like the video, go ahead and like and follow me just to support the page. I provided my Discord link here. This is the lifetime link, so sometimes there's issues with this. If you have any issues, just go ahead and send me a message and I'll get you a temporary link that'll work. Some benefits of the Discord is I do a pre-market update with some key support and resistance levels to watch. Throughout the day, I'm on there doing live commentary on SPY and the general market with updates about key levels that are broken. I also do live trade alerts. Currently, it's $20 per month or $228 for the year. If you want to follow me, I'm on YouTube, Twitter, Instagram, TikTok, and Reddit under Daddy Dersh. Thank you.